Hi everyone, today let's go over Credit Suisse, then we'll go over PPI results, then we'll look at Fed futures, which seem to change every single day, then we'll go over the charts, then we'll go over my results for the day and my positions going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Credit Suisse has been an issue. We've talked about them before. There's been concerns about their capitalization from a couple of months ago, and it was announced today that they will no longer get any liquidity support from their supporters in Saudi Arabia, and that obviously put them in a tougher spot. Since then, the Swiss central bank said that they will lend them some money in order to keep their balance sheet a little bit more healthy, but obviously they are needing support, and that did put some pressure on European equities, which did affect us, of course. Shares of Credit Suisse fell 20%, and that's after they fell quite a lot over the last few months as well. They say that there is a material weakness in their financial reporting process. The rest of the European banks went down as well, including 6.8% for the US traded Deutsche Bank. So again, everyone's being affected. Wells Fargo, Goldman Sachs, the bigger players are being affected this time. Before it was mostly regionals, but now even our biggest banks are starting to struggle. They did seem to recover here, looking at Wells Fargo's chart, but not nearly as much as they fell. You can see it was trading up around $40 and then dropped to $38, which is a pretty big move for banks. Of course, the regional banks continue to struggle after they recovered pretty well from yesterday. And they mentioned that Credit Suisse is unrelated to the mid-tier US bank issue, just happens to be at the same time. But obviously, that's going to put more risk into the system, and it seems like there might be some correlation that they might not be telling us about. Moving over to the economic calendar for today, you can see PPI came in actually really good. So we have the original here at minus 1% compared to the expectation at 0.3% for month over month. Core PPI was 0.2 versus 0.4. So both of those beat expectations. Both of those are what we want to see year over year, 4.6 compared to 5.7. And then core year over year actually came in at 4.4, which was the same as the previous iteration. So again, not what you want to see. Business inventories went down a little bit. That's pretty good to see. And then tomorrow, of course, we have jobless claims. Keep an eye on that one. Continues to be a fairly hot topic here recently. If this comes back a little hotter than expected, it's starting to look like bad news might be actually bad news here. And then at the end of the week, we have the U.S. leading economic index expected to be negative here and consumer sentiment at 67. It would be interesting to see both of these come in a little bit worse than expectations and see if we're going to start moving in the direction of the actual recession. Right now, we're seeing some cracks in the foundation, but we haven't moved dramatically in the downward direction quite yet. Moving over to Fed futures, I think we'll just go over this in every single video. It seems to change all the time. And you can see here now, 51% chance that we're going to get a pause in March. I think this big move here today is mostly because of PPI. It came in extremely light, which does give the Fed a little bit more ability to be flexible on rates. I think they can come in a little bit more dovish at this next meeting, saying that they want to give these regional banks a little bit more room, allow them to restabilize their balance sheets, use the new Fed facility. But also we're seeing some economic factors that are looking weaker, which generally should give us some lower inflation in the months to come. And like I said, I think PPI just topped off that argument. Moving over to May here, we're still expecting a 25 basis point hike if we do get the pause. But if we don't get the pause, then we should get the pause in May. That's interesting. So if we do get this 48% here in March, then we should expect a pause here in May. And then pretty interesting here, looking at June, you can see expecting 4.5 to 4.75, which is where we are right now. So I'm not sure exactly what that means, right? So if we do get a 25 basis points in the two meetings prior to this, and we get to June here, does that mean they're looking to cut in June? That's the highest probability right now. That's definitely a little bit interesting. I don't think that that's going to happen, but that's what the probabilities say right now. And then similarly here in July, once again, the highest percentage is 4.5 to 4.75. Meaning that looking at May, the highest probability right now is 4.75 to 5, and that would be the peak for interest rates based on the current layout for the next couple meetings. Moving over to the charts, starting with the S&P 500 on the hourly and the daily chart. Man, this is some tough trading in here. So we gapped down huge on the Credit Suisse news, kind of double bottomed in here and then rallied pretty strongly here on the S&Ps. But I just want to highlight this wick that we had on the 1400 candle. So we came off this trend line, got rejection, makes sense, came down to VWAP, found support, and then rallied basically $2 into the close. Once again, very strong close, pretty interesting. Looking at the daily chart, you can see we closed just above the trend line, just like we did here on the hourly chart. Pretty interesting. Does look kind of bullish. Daily chart still looks pretty bearish, to be honest, but momentum is moving in the bullish direction. RSI still slightly bearish. Does seem like a spot where you could get rejection off of this trend line. But right now, we've continued to hold in this zone, and it seems like somebody might be building a position in here. So we had a previous consolidation, the bounce, the bigger move down. Does seem like we're exiting a position here just based on what it looks like. Lots of consolidation, really choppy, violent moves through here. So keep that in mind. Still looking to go sideways, still neutral going into tomorrow, but still does look a little bit bullish going up to this next trend line at 392.50. And then hopefully we can hold this 386 level going into tomorrow's session. Moving over to the NASDAQ here on the 15 and the 4 hour. Again, looking at this chop, really choppy in here. I traded fairly well through the mid-session, actually. Not too bad. Did miss a lot of this up move, unfortunately. And then in this last section, zooming in here, look how choppy this was from basically 1330 all the way to the end of the day. Just really chopping sideways through some huge wicks to the downside, taking out this previous wick. And then moved from about 297 all the way up to 299 right at the close. Again, closing very strong. Lots of momentum, lots of volume as well. It almost seems like someone might be trying to close a short position where they're buying up all of those short shares. Just something to think about. Otherwise, here, looking at the 4 hour, similar story. Looks very bullish. We're at resistance. Looks like we're breaking through that. Closed just above it here. Momentum, very bullish. RSI, very bullish. Everything looks good here. Looking at the NASDAQ for tomorrow's session, it almost seems like people are moving into tech as a way to protect themselves from the banks and this crisis. Big tech is generally going to be a safe haven. They have lots of cash. They don't have to worry about the banks nearly as much. And they only play really with the big players in banks. The regionals and the Credit Suisse shouldn't really affect them nearly as much. Moving over to the daily chart for the Russell and the Dow. Again, basically a sideways choppy day. We ended up gapping below the trend line again, closed below it. Definitely not what you want to see. Does look a little bit weak into the close. Pretty interesting. But we've wicked these lows going back to December, and we continue to hold that level. So that's what we're looking at right now. If we don't hold this level, then we're looking to the previous lows going back to September and October on the Russell. Does seem pretty attainable here. The Russell had traditionally been quite a bit stronger, but after this meltdown, pretty weak. Looking at 164 here to the downside. If this breaks, if we can get back above, then we're looking at this trend line at 179.25. That would be interesting. Moving over to the Dow, similar thesis. If this area breaks and we do get below this 317, 318 level, then we're looking back down to this gap at around 311, and then we have the lows all the way down at 286. I don't necessarily know if we're going to get that low here on the Dow, but otherwise, this is still sideways consolidation through a wick to the downside, so we're not breaking down quite yet. Still sideways chop and looks fairly neutral going into tomorrow's session, unless we can take out this 316.70 level. Moving over to Apple and Tesla on the daily chart, you can see Apple continues to be quite strong through a wick through that support level, continues to bounce higher, holding at the highs here. These most recent highs yet, sitting at basically yesterday's highs. Does look a little bit stronger than yesterday going into tomorrow's session. Tesla, on the other hand, through a doji and a wick to the downside, looks a little bit weaker. Probably going to get pushed down by this 9 EMA. We talked about that yesterday. Does seem like we're probably going to get a little bit of a breakdown and probably a retest of the 55 EMA, which is currently at 165.62. Again, if that breaks, then we're looking for the gap fill down around 144.50. Moving over to Google and Amazon here, you can see Google breaking out, looking to retest that 144 EMA on the daily chart. Amazon also breaking out, not nearly as close to the 144, but it is above basically all the other EMAs and VWAP. So looks strong going into tomorrow's session. Both of these look pretty bullish going into tomorrow's session. Moving over to transports, this is definitely not what you want to see. So we gapped down through some wicks to the downside. does look minorly bullish on the 4-hour coming off of this support level, maybe coming up to retest the 9 EMA on the 4-hour chart, currently sitting at 221.24. That would be interesting, but looking at the daily chart, this looks very weak. Certainly, it could be an island reversal type setup. We've seen a couple of those here where we came down, island, pushed higher, came down, island, maybe we get a push higher. That would be interesting. Right now, transports continues to look weak, potentially looking for a bounce off of this 215 level. And I don't think I would be looking for this to be bullish until we do get that test of the lower support level. And then we get a continuation of a more substantial base and then move higher. Moving over to staples versus discretionary, we have clear outperformance. We have clear outperformance from staples. You can see big bullish day, got up to 72.59, closed above the previous day compared to discretionary, which gapped down, did fill the gap, so slightly stronger than you would expect, but definitely not nearly as strong as consumer staples. This definitely looks weak. Even if we do get into the zone, we have lots of resistance to the upside. Wouldn't really expect this to trade above 144 if we even get up to that zone. Certainly possible that we could get a move higher, but I do expect it to be met with selling here on consumer discretionary. Moving over to AMD and NVDA, AMD continues to be a monster here. NVIDIA, again, gapping down, retesting resistance, just can't seem to get above that trend line. Eventually, we're probably going to see a more significant breakdown from here, but just hasn't quite happened yet. We continue to move right along the trend line. I don't expect that to change here over the short term. Moving over to yields just for a moment, not much to say here. They cratered once again here today. 10-year back at its most recent lows, pretty close. 2-year making new lows, coming back through this area where we had significant uptrend. So again, yields look very weak. They continue to look weak. And that's probably what's helping tech right now as well. So keep that in mind. Yields look weak. Tech probably going to look strong going forward. And on the flip side of that, looking at the dollar on the 4-hour chart, you can see some big strong candles coming through the evening. On the 4-hour, this is because of Credit Suisse. People don't want to trade in European currencies right now. There's definitely some concern. And of course, that is helping to prop up the dollar. Couldn't get above resistance here, through wick through that level, and then sold off pretty strongly. Back to the 55 EMA here on the 4-hour chart. Daily chart continues to chop within this range. It's been here for many months. Not much to say here, but did show a little bit of strength on the session. It's also looking like it might rally here in the after hours. It'd be interesting to watch this get back up to maybe 105.50 or so. That would be interesting. But I don't know how much of an impact that's going to have on U.S. equities right now when there's weakness in the EU. Moving over to high yields, you can see we gapped down, got very close to that 89 level. I did put this trend on here going back to the lows from the end of December, looking for that 89 level to break if it's going to happen. We've definitely moved down and we've had a lot of volatility in this area, but it doesn't quite look like we're going to move down below the 89 level yet. Certainly could happen. But anyway, we gapped down, rallied a little bit, threw a wick to the downside, and then rallied a little bit into the close. Daily chart continues to chop within this zone. So we had the gap down, gap up, gap down, choppy nonsense going on here. Right now, I'm just watching if we can get above the 9 EMA on the daily chart or if we get below this 89 level here on JNK. Moving over to TLT, I extended this trend line out that we were watching here previously from the most recent lows through this secondary low, up through this downtrend, and then once again, we're interacting with that level. You can see we have a double top right at it. Does look like we're coming up to retest again. So we have 2 tests. If we get a third, that might be interesting. Certainly possible where we see a push through that level. Then we're looking for probably 109 to 110. And then we have 115 price target above that. So definitely some upside to be had here on TLT. Looks strong. But looking at the daily chart here, similar to JNK, just in reverse, where we have a gap up, gap down, gap up. Pretty choppy nonsense. Looking for a consistent move to get above this trend line. Otherwise, still looking at 102.50 probably as your lowest level of support if we do get below this other trend line at 105. Moving over to the VIX here on the 12-hour and the daily chart, continuing to throw wicks through the resistance lines, continues to hold generally above the 9 EMA here on the 12-hour chart. Not much to add, still looks kind of bullish, does look a little bit weaker here today than it did yesterday. RSI looks weaker again, especially compared to Monday the 13th. RSI readings from Friday as well as Monday on the 12-hour chart both look stronger than they do here now. So might look to see a little bit of a rollover here on the VIX going into tomorrow's session. Moving over to my accounts, you can see I was down just about $200. Pretty upset about this, honestly. I was trading really well multiple times in the session, but then like I said on the Qs chart, I did get chopped up on that high. I really need to look at that section and assess why I was trading the way that I was trading. Really did not trade that section well and gave back a lot of gains and ended up in the hole here on my share position, so definitely not what you want to see. I traded options really well throughout the session though, and you can see I ended up with a profit here in my IRA, almost a profit on my individual account, especially considering the big negative day that we had on the IWM. That was interesting. So really I need to do some homework on that section and make sure that I was doing it right. Obviously, I was not. I need to relook it for sure. But otherwise, looking at my positions for tomorrow, I converted that put into a covered call here going into Friday. I do think we might see a little bit of strength on IWM. And even if we don't, I'm going to collect this $2.28, which is a pretty good credit, honestly, for 2 days on an IWM position at 173. It does look a little bit strong. I might look to see if I can get a covered. I might look to see if I can find a way to put this other capital at risk here. Maybe I'll continue to sell put spreads here on the Qs like I did here. You can see a 293 put that I sold early in the session. I actually sold a 292 put earlier and then rolled it up. So I did make decent money here. And that's part of where I got that profit despite the down move that we had in the IWM. And then I picked up a covered call position here on the NASDAQ as well. So 200 shares here as well as some 298 calls for $1.89 here for tomorrow. You can see it's showing a big loss here, but obviously that's not reality if I have shares. So really my max profit here is going to be $299.84. As long as we close above $298, I'll realize that full profit, and this loss obviously will go away. So right now it's actually not too bad. This 212 minus the 146 really is only like a $60 loss on the day, but definitely should have done better. Definitely could have traded better throughout the session, but otherwise bullish going into tomorrow's session. Let me know down in the comment section what you think of Credit Suisse. Are we going to get a pause in March? Are we going to get a pause in May? Are we going to get a cut in June? All of that is very crazy. Definitely not what we thought we'd be looking at just a couple of days ago, honestly. But otherwise, if you got any value out of this video, make sure you like and subscribe and hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.